Let me explain. Let me explain something. Check this out.
You've got to be the change you want to see in the world. Be the change.
Check this out.
So we wanted to kick off this week, before we really get into the nitty-gritty on NumisMe and our near-term roadmap and some upcoming exciting things that we have to talk about. We're just going to review the current market conditions. And so you've probably seen this on Twitter. One of the things that we are very much big proponents of is educating investors empowers investors. We want everyone within the NumisMe family to come out of this bear market cycle as a more informed, better educated, and more successful investor, not just in crypto, but just in general within your own life, just to make better and more informed decisions about how you handle your money. And so we like to talk about in these posts on Twitter, we like to talk about things that are going to impact your money. Let's just do a quick recap. We'll start with Bitcoin. So Bitcoin, for those who follow since the last Numis meeting, Bitcoin had that glorious drop down into the upper teens. I think it was around, 17K-ish. We have had a nice little recovery since then. Here's the thing with Bitcoin. Bitcoin really does drive crypto markets. And so even as a Noom investor and a Noom supporter, you only have so much movement without Bitcoin first kind of leading the way. And so what we really want to see is we want to see Bitcoin begin to make a prolonged recovery. What are we going to look for that indicates Bitcoin is on a path to recovery? Well, truthfully, while Bitcoin does have its own cycle, right now we're looking at a macroeconomic climate that is very much driving markets, all markets, not just crypto, everything. When you look at Bitcoin essentially is responding to that macro climate the same way as the equities are. It's kind of inversely correlated to the dollar and the strength of the dollar. As the U.S. Fed has been trying to tackle inflation and doing things like raising rates, that's put a lot of sell pressure, bearish pressure on things like Bitcoin. That's kind of what got us to where we are. The things you're going to want to watch for, the things that are going to help you determine when to make bigger or outsized positions in your investments. Actually, let's take it a step back. Let's talk about where we think Bitcoin is right now. A cycle perspective, we're seeing a lot of indicators suggest that we are at historically good buy range. This is an optimal range if you were in the earlier cycles where things, and I'm going to just rattle off a few. One is inflows. Inflows being when someone moves Bitcoin into an exchange, usually associated with selling, sometimes for using as margin for leverage trading, but usually associated with selling pressure, right? Those inflows, as of a week and a half, 2 weeks ago, were at the levels last seen at the COVID crash and the 2018 bear market. If you had bought at those points, you would have made some very healthy gains, right? Another one is the market value by realized value. This is something that shows the average profitability of circulating supply, and that's in a historically optimal accumulation range. And then there's the Pure multiple, which shows miner profitability. And miners and their profitability is really critical to the whole space because miners are the backbone of crypto, especially of Bitcoin and proof of work chains. Without them, there is no Bitcoin, right? So their profitability is always key. Where that Pure multiple is right now is historically going to be an outsized return. And there's a few others, like the momentum, the RSI indicators are showing that it's very oversold, the fear index at record lows, and supply trends showing massive accumulation. But while Bitcoin does have this traditional cycle and these patterns and these indicators that say, hey, this is a good buying range, not just for Bitcoin, but for other things like NumisMe, for example. You don't want to rush all in at once. You want to remember that the macro picture is really what's driving things. So until we see a clean, or at least a clear resolution or a little bit of relief in terms of Russia, the inflation, oil, supply chain, all these things are kind of interconnected. And these are what are driving markets down, right? Or at least holding them down. So what are the things to look for so that you feel comfortable in maybe investing a little bit more? Look for in the coming months for inflation to show some progress. Specifically, the consumer price index is the report that the U.S. Fed generally goes and refers to make their determination on whether or not they need to take more aggressive actions to bring down inflation, like raising rates more aggressively. Next is the U.S. Fed actually showing a willingness to relax on the rate increase. And we're already kind of seeing some early signs of this where people feel like if the next month or so shows the CPI report coming back with improved numbers, that the Fed may just do a couple more 75 basis point hikes. And they might start to back off as we get closer to the autumn timeframe into end of Q3, early Q4. You want to also look for the dollar index. The dollar index retreating from its generational highs that it's at right now, multi-decade highs. And a lot of that also depends on whether or not the European Central Bank takes a more aggressive stance on their rate increases. These are just some food for thought. The number one thing that I and the rest of the team want to see, among all the NumisMe family, all the NumisMe community, is that we come out of this cycle as more informed, more empowered investors, and that we all are successful together. So I know that was a lot, Mr. As did like a big brain dump on all the different things to look at in the market. I don't know if there's anything you want to add or anything I missed.
I think you did a fantastic job covering kind of macro market conditions there, and I tend to agree with you on pretty much all those points. The only thing I would add is, when we're talking about things to look for as a confidence indicator in market movements, from a technical standpoint, volume, right? In terms of the macro environment, definitely want to keep an eye out for all the events that Mr. Pappy has just run down to give us a sense of where the macroeconomic conditions are headed. But from a strictly technical perspective, if you're a charts type of person, the price action you see is probably more likely to be sustainable action when you do see big volume coming in, right? Because that does indicate that there are a lot of folks participating in the market on both sides of the table, right? On both the buy and the sell side. That indicates a healthy market. That indicates healthy sentiment on price action. And if that is coupled with upward price action, then you see basically a lot of market participants overall believing more in continued upward movement of the price. So for me, it's a combination of kind of macro conditions plus a little bit of technical analysis and looking at some on-chain metrics as well. Do we have any insight on on-chain metrics there, Mr. Pappy?
One of my favorite things that I like to look at, there's a few that we talked about that are on-chain. When we discussed the inflows, did hit capitulation levels. When we look at accumulation, meaning people then buying Bitcoin and moving it off exchange, we're also seeing that just continue downtrend. So despite these massive inflows, these massive sell-offs and capitulation event, it's all been absorbed. The net supply continues to trend down. And this is something that we haven't seen, that we're seeing new this cycle. In previous bear cycles, you would just see that kind of slow bleed as supply of Bitcoin increases on exchanges. But we are seeing quite the opposite this time, where supply continues to drop, which means that it's a net drop of supply is a very bullish indicator. It's not going to be immediately realized in terms of price, but it means that there is demand out there. And that's an extremely healthy metric that really goes to show the maturity this cycle has brought. Everything since, really 2020, we've seen an influx of institutional money, nation states investing, even banks that had previously been dismissive of crypto, sometimes aggressively so. Politicians, even the U.S. government, is in the middle of a 6-month study of how to integrate cryptocurrencies into all of their different departments. This is an unprecedented time. This is a once in a lifetime opportunity, this window. We're not at that kind of inflection point where we have mass adoption yet, but we're seeing those early indicators of it. So it's really exciting to see all of that play out, and to be a part of it.
Yeah, absolutely. To your point, kind of zooming out a little bit there, we're seeing record inflows, but with supply dropping and the price fairly stable, right around the 21,000 price range on BTC. The implication there is that, like you said, there's demand out there. As much as there is fear, there are plenty of market participants that are looking to take all that new supply of Bitcoin that's coming into exchanges to be sold off, and they're putting them right into their bags. We saw just a couple days ago a couple headlines about how there are something like 13,000 plus new whole coiners during this consolidation phase that we've been in. And certainly with the dip down to 18,000, right? That glorious dip that Mr. Pappy referred to. And that's another strong metric as well. It shows demand. It shows that not everybody is fearful. Folks are positioning themselves for that next leg up. Maybe it's right now. Maybe we need a little bit of time for the macroeconomic conditions to kind of shore up a little bit. But overall, I'd say it's not looking as bad as it did, just a few days ago even. Not financial advice, just opinions over here.
Yeah, thanks for adding that. I'm inclined to agree. And this is where, if anyone has any questions, anyone's listening to this and they say, hey, I'm just not sure what kind of strategy is best for me in investing. Do I, thinking about going all in, or I'm thinking, thinking of diversifying, or I have a 401k, or whatever it may be. We cannot provide financial advice, but we can give you our thoughts, our perspective on things that have worked for us, and our perspective also on the market. And I know at this range, I've been dollar cost averaging into some of my positions, including, NumisMe, of course. And I'm just, the way I do it is every paycheck. I get paid every 2 weeks. I just set aside a flat percent, put it into crypto, and then walk away. And then I'm not going to look at that until the next bull run. And that could be around the corner. Some people like me think that we may see some spiciness before the midterm elections in the U.S., which is in November. But others think it could be farther out. But in any case, I'm not worried. I'm just here to accumulate and build. That's all we can do in the bear, right?
Why don't we just kind of kick off into the rest of our agenda there, Pap? And, you make a really good point there when you talk about how we look at the market and our past experience. And I would just add to that, our collective experience and our collective analysis of the market is applied to our yield strategies for NumisMe. The way we look at the market, the way we interpret risk in the market, and the way we deliver yield, those are all intertwined with our personal perspectives, our personal experiences, and our own time in the market. Having lived through the 2017 boom and then the subsequent retrace in 2018, we've seen all the ICO rush, we've seen the altcoin rush, lived through DeFi summer, the NFT boom. I mean, it just keeps going on and on and on. And this list of these milestones or these large, events that happen within the crypto space, it makes it seem like it's like decades worth of milestones, right? But really, we're really just talking about a handful of years here. And that's what's super interesting is just how quick the space moves, how quick things can change in both directions, right? And that all plays in to informing NumisMe, informing how NumisMe is going to continue to generate yield. And so from a DeFi perspective, let's kind of, set the table here real quick. We are on the cusp of launching our DeFi products under the NumisMe brand, right? And those DeFi products, we have been testing, we have been looking at all kinds of yield opportunities out in the market. But more importantly, with just the market conditions as they are, as everybody's well aware, but more specifically due to just it seems like just, one after the other, we're seeing these fairly significant liquidity events happening in the space, right? We're seeing, starting with the UST depeg and the contagion that spread to some of these funds out there and some of these other algo stablecoins that have consequently had some depeg risk. As we've been testing and getting our DeFi products ready for launch, we've paused that a little bit. We had intended to be live right now, but we thought it was prudent to just kind of hit the pause button there for a second. We did want to take a beat to assess ecosystem risk, just see what the potential fallout is from various funds being insolvent or the potential impact of various algo stablecoins. We don't have to name them specifically, but the risk of those stablecoins depegging and what that would mean to our ability to generate yield, but more importantly, what that would mean to the safety of our users' funds. All that to say, we are focused on making sure that user funds are safe. We're making sure that our yield is delivered reliably and sustainably. And the only way we can do that is to make sure that we have our eye on the big picture of the crypto space, right? And the DeFi ecosystem. And, I'm happy to say that we've pretty much wrapped up our risk analysis. We're back into finalizing our product testing, and we are just a matter of days away from launching our DeFi suite. So that's all good news. And I'm happy to say that the yield strategies we'll be employing do look healthy. The protocols have released some information, some data that does make us feel very, very comfortable going in to those protocols and leveraging deposited funds through our vaults to generate yield. That is just right around the corner. And with that, quick little couple of community updates. With the launch of our DeFi suite, we'll also be going live with our token swap, right? So for any of you out there that are on live or, listening to the recording and have been part of the Y-Axis project, we're happy to say that really soon, within a matter of days, we'll be going live with the Axis to Noom token swap. So that's a nice little bit of news. Alongside that, we'll have multiple stablecoin offerings. We'll have 2 vaults that accept stablecoin, and will generate some healthy yield against that stablecoin in a sustainable way. We intend to do that through any market conditions. And that's what's really important to really understand is just because the market's down, just because, there's fear out there, that does not impact the way that we, NumisMe, as a protocol, operate. It does not affect the way that we generate yield. As long as we can be comfortable with the yield strategies we're leveraging and the health of the ecosystem and specific protocols, we are able to generate yield against your stablecoin or whatever base asset you may be holding, be it, ETH or, maybe you're in the CVX crew, right? Maybe you're holding onto some convex. These are volatile assets that we can't control how the price is going to move on. But what we can do is, irrespective of price movement on these volatile assets, we can continue to generate yield against that. And that's what I think is one of the core value propositions of NumisMe and our DeFi suite, is the ability to continue to generate that yield, continue to deliver positive ROI, taking the notional value of your base asset maybe out of the picture if it's the volatile asset, but continue to deliver a return on your investment. So yeah, it's really exciting times. And I think while we're still talking about the DeFi portion of NumisMe, the way we plan to approach rewards/incentives to make sure that folks are properly incentivized to use the protocol to deposit their funds and to leverage our yield strategies is to have a hybrid emission system. And so, for the benefit of anybody that hasn't been following us, and sorry if you have been, you probably already know this, but just to recap our hybrid emission strategy, the way we're going to be sending out rewards is to incentivize the vaults with Noom emissions. That is our native governance token, the Noom token, N-U-M-E, and we'll take those tokens and we'll increase the APR on your vault returns with Noom. On every vault deposit, you'll be earning the base strategy APR, and we'll add on top of that, we'll sprinkle some Noom tokens to boost your APR. Now, normally what happens with these vault rewards is users are usually incentivized to sell them as soon as they can, as soon as it makes sense with gas price and how much your pending rewards, your accrued rewards are worth from a notional value standpoint. As soon as it makes sense to sell them, folks tend to sell them. Why? Because you need to realize your effective APR, and the only way to realize that APR is by selling the token, right? But what we want to do is provide a different type of incentive for folks to not sell their rewards. And what we're calling that is our Noom compounding loop. And what we're offering is all vault users. And by the way, this includes liquidity providers as well, because we will be incentivizing them with Noom rewards as well. But just taking the vault user example for a minute, we'll be taking the Noom rewards from your vault deposits and giving every Noom holder out there the option to stake your Noom and lock it up for various periods of time. And when you do that, you get access to basically the more advanced yield optimization opportunities and the compounding loop. Now, in terms of yield optimization, when you stake your Noom, you're basically able to boost your rewards APR by up to 2.5x. So whatever you start off with on your base vault deposit, whatever your rewards APR is, when you stake your Noom, you can increase that rewards APR, thereby increasing your effective overall APR on your vault. When it comes to the compounding loop, what we're saying is don't sell your Noom rewards. Go lock them up, boost the rewards that you're getting on the vault, and increase the rate at which you are stacking your Noom, and continue to lock them up, continue to stake them. Why? Because all Noom stakers will be given revenue share from the protocol. We generate revenue in a few different ways. We generate revenue in terms of taking a small performance fee on the yield on vaults. We generate revenue off of token transactions because we do have our reflections, and the eventual revenue that'll be coming from our real world partner integrations, right? The real world utility that is the digitization of loose change at the point of sale, at the store. That represents a three-way revenue stream for us. And what we're doing is we're sharing that revenue with Noom stakers. And I think that's a pretty cool system, because what that essentially provides the user, whether they're a Noom holder or a vault user or a liquidity provider, it provides them a new type of calculation, right? We want them to take a beat, take a pause, and look at their rewards and ask themselves, is it worth it for me to lock in my rewards APR and be able to realize that return now at this moment in time and no longer be exposed to spot price on Noom because you sold it, right? If Noom goes to the moon, then you've already sold it for your rewards APR. You won't be exposed to it anymore. We want folks to take a pause and just think, hey, is that more worth it to me right now? Or is it more worth it for me to take my Noom rewards and go stake them and basically generate passive income? This passive income is shared in non-native token. And what that means is we are sharing our revenue we're actually considering sharing it in either ETH or USDC currently. But what that means is when you do get your revenue share, it is not in our native token. So if you do want to go sell off that asset that you get as part of your revenue share, that doesn't affect the protocol. That doesn't affect our token price. And basically it creates this positive feedback loop where more and more Noom hopefully get locked up, right? We see more and more revenue getting generated from folks that are looking to access our vaults, our LP, or just straight up for their revenue share. And we continue to generate more revenue. We share that. It creates more desire for more folks to come in and take a piece of that revenue. And so it's just this virtuous cycle. And I think that's the super interesting part about what we're building. But yeah, I think I've rambled long enough on that one. The other thing we wanted to talk about is, right after, just real soon after we launch our DeFi products here, just like I said, in a matter of days, one of the things we wanted to talk about today was just real quick, talk about these self-repaying loans, what it is, how it works, and what it means for NumisMe. Now, like I mentioned at the top of my long ramble there, one of the ways that we generate revenue is off our TVL. It's off essentially our assets under management. It's off of the value of what's deposited in our vaults, right? The more deposits we get in our vaults, the more revenue we make. That, I think, is super interesting with respect to our self-repaying loans product, because the self-repaying loans product only adds to our TVL, right? So it becomes another source of capital capture for us to acquire capital for our vaults through our self-repaying loans product. And the way that works, it essentially at a high level works like this. You bring us, let's say, $100 worth of stablecoin, right? What we'll do with that stablecoin through our PayMe self-repaying loans, it's a little play on NumisMe, PayMe. What we'll do is we'll take your $100 worth of stablecoin and instantly give you 60% of that back as a loan. 60%. So if you bring us $100, we give you $60 worth of stablecoin back right away. As soon as you deposit and you click the button, you'll get your $60 in stablecoin, and you can do whatever you want with that. Whether you want to go buy some Num and go stake it, or you want to go, use that to go buy a new pair of shoes. It really doesn't matter to us what you do with that money. The fact that you get it instantly is pretty cool. Now, the reason we call it a self-repaying loan is once you've taken out that 60% loan against your collateral, your original $100, what we do is we pay your loan back for you. There is no interest on the loan. In fact, if you want to consider it in one way, it's actually a negative interest rate. We pay you to borrow that money. We use your collateral to generate yield, and we pass through that yield to pay down that $60 loan, right? And once that $60 loan is paid down over the course of maybe about, roughly 3 years, what we'll do is we'll return your initial deposit, that initial $100. So at the end of this 3 years, you've realized a 60% return on your $100 investment. So let's say you haven't spent that $60 loan, you didn't get those new shoes, you didn't go buy some more Num. At the end of 3 years, you're sitting there with $160. You put in 100, you get 160 back. So that's effectively a 20% per year yield on your $100 initial deposit. That's something that we're really excited about. We're really excited about the potential for folks that have their idle cash, the folks that are maybe a little bit hesitant to go into a yield strategy that returns their yield, their APR, in a native token like Num. Maybe they want to realize all their yield up front in exchange for locking up their collateral for a few years, right? And so that we think represents a really compelling use case for a lot of capital to come in through our PayMe self-repaying loans. And that just means we get more vol TVL, and that just means that we get more revenue, right? And that is really our approach to DeFi, right? It's all about revenue. It's all about utility. It's all about especially real world utility. And from where we sit, we do fully believe that the next big phase, the next big trend in DeFi, at least one of the next big trends in DeFi is going to be that real world utility, and especially tie-ins with real world commerce. And that's what we're talking about at NumisMe, right? Our core IP is all about bringing that real world utility to DeFi by digitizing your loose change, bringing it into the app, and allowing you to take the loose change from your point of sale and generate yield against that. And so with all these different pieces, hopefully this isn't, flying over anybody's head. If it is, please raise your hand, ask a question. We're happy to clarify. But with all these different pieces in place, and especially our hybrid emissions model, we're really excited to not just give folks that may be a little bit burned by the market, give them an opportunity to kind of claw their way back, but also give folks that are sitting on the sidelines with their stablecoins, give them an opportunity to generate yield and not miss out on that time cost, the opportunity time cost of having their capital just sitting there. Allow them to generate yield in any market in a reliable and sustainable way, and certainly risk mitigated ways too. That really just comprises the whole of our DeFi products and our PayMe self-repaying loans. That'll be launching in very short order. Maybe, Mr. Pepe, why don't I hand the mic back to you? Do you have anything to add, sir?
Oh, I keep missing that mute button. This is the third time I've actually said this. First time unmuted. But if you have any questions about anything that we're talking about, please just drop them into the chat. And if you're listening to this recording later, feel free to drop into Discord or DM us on Twitter or Telegram, and we're glad to talk about it. But that loan feature is the thing that I'm really excited about. That's always, in terms of innovations in the DeFi space, that to me has been one of the most remarkable. Just the fact that you can just, as long as you have the collateral really is the loan, right? Now, instead of having to go through a bank, instead of having to worry about your credit score, worrying about, how long it's going to take, you just click a button, you get that money back. And then it's such a, from an investment perspective, it's actually such a great deal. It's just time. Your primary investment there is time. And luckily, I am a little bit older, I guess, than some that are investing, but I got enough time for that.
Mr. Pat, while you were speaking there, NFT G-Gen over here, he was raising his hand. I do believe he's got a question, so I brought him up on to the speaker stage here. He's got his hand raised. What's up? What's the question, sir?
Oh, thanks. So yeah, I just want to make sure I understand you correctly. So you are going to be repaying collateralized loans. That's kind of like your yield strategy, correct?
We are paying it back with the yield we generate on the collateral through one of our stablecoin yield strategies. But I wouldn't say that our PayMe loans product is a yield strategy in itself.
Okay.
If that makes sense.
Yeah, that makes sense. I was kind of wondering, after watching what happens with some of the stable coins depegging, like UST and USDD, like what stable coins are you going to support when it comes to that? To prevent things like a depegging option, and then now your collateral is gone and it's worth nothing. Stuff like that.
No, that's a great question. And that your question is exactly why we took a pause, right? We hit the pause button on launch. We wanted to make sure that our approach to stable coins and generating yield on stable coins was sound, and especially that the protocols we'll be using to generate this yield, that they are healthy themselves, right? Because the last thing we want to do is go into a protocol that, as soon as we go in, we see a depeg event, right? And so to put you at a little bit of ease, with our PayMe loans product, we are generating yield through MIM, and that's Magic Internet Money. That is Abracadabra's stable coin. And what we'll be asking users of our PayMe loans to do is to bring us that MIM, that MIM, that Magic Internet Money, that stable coin, and deposit it into Borrow and into our PayMe loans, rather, I should say. And our PayMe loans will route that collateral, that deposited collateral, into our MIM yield strategy through our USD vault. And the way that we're issuing stablecoins is that we will issue essentially an IOU in the form of NumisMe. That is our own stablecoin. And the way that we provide liquidity for that is we'll be creating a pool on Curve, which is essentially a really advanced automated market maker. And so we create a pool that has NumisUSD paired up with USDC. And through that pool, every user that gets their 60% LTV in NumisUSD, you can go take that NumisUSD over to the Curve pool and go swap it out for USDC. And with USDC, you can then do whatever you want with it, right? The NumisUSD is essentially an IOU for USDC, if that makes sense. And the way that we're looking to mitigate, or the way we're mitigating risk on both our Curve pool and our stablecoin, is there are different parameters. We don't have to get into it. It's a little bit technical, but it basically gives the pool more flexibility in the event that it becomes unbalanced, right? And what you want to see is a little bit of flexibility in the peg, right? You want to be able to absorb a little bit of an unbalanced pool, because you don't want a slight variation in pool composition to basically kick off a cascade, right? That as we've seen, can be catastrophic. So we're managing our pool composition, the tolerance for the balance of our pool composition. We're making it a little bit more flexible. We're allowing for a little bit more deviation, and that is paired up with us making sure that, we only go into USDC. We have MIM which is the collateral deposit that we bring into our PayMe loans. MIM is over collateralized, right? Which means that for every $1 of MIM, or every MIM token, which is supposed to be at $1, there is more than $1 of assets backing that in that protocol, in Abracadabra. The case for USDC is that USDC is also fully collateralized. They are fairly transparent, and they've been doing great, right? There's been a lot of demand for USDC out there. I think the market capitalization has been growing, and we're really comfortable with having our pool be reliant on an asset like USDC. Very stable, very reliable, has never had a DPEG event, an actual DPEG event. So in those ways, that's how we're mitigating risk. I hope that answers your question without adding more questions into it.
No,
But please,
no.
if you have more questions, hit us.
No, that helps out a lot. Thank you. I appreciate it.
Oh, yeah, you're most welcome. Thank you for the question. Great. So I'll take, if no more questions, sir, I'll take, oh, yep, moved you off of the speaker stage. Great. Do we have any other questions out there?
I did see Rye post something in Telegram about a Noom stable coin.
Ah, yeah, Rye. Is that a question, or was that just a statement you posted on TG there?
I think he's curious to know about a Noom stable coin, if that's ever going to be a thing.
Yeah, it is actually going to be a thing, and that is the way that our PayMe loans works. And just to kind of reiterate, the loan that you take out against your collateral, again, you deposit your $100 and you get your $60 right away. The $60 is the loan that you take out against your $100 collateral. That $60 is delivered in the form of the Noom stablecoin. It's actually going to be called Noom USD. And that's a little bit of alpha, but yeah, that is the token that we will be issuing you essentially as an IOU for that same value in USDC. So when you get your $60 of Noom USD out of PayMe loans, you go take that over to the pool and you swap it out for USDC 1-to-1 on Noom USD and USDC, right? And you can do whatever you want with that, right off the bat. You go, swap your USDC for Noom, sure. Or maybe you take your USDC and you want to bring it into one of our vaults. Awesome. Or, like I said, maybe you need some new shoes, or you got to pay some bills, or, maybe there's a Goblin Town NFT that's the floor is moving down and you want to get in on that action. I think Mr. Pappy is very, very familiar with that approach. But yeah, you can do whatever you want with it. So hopefully that answers your question there, Ryan.
I think it's worth mentioning, you did bring it up a few times, but the stablecoin risk in that we paused while we were watching a lot of this market contagion unfold from, following Luna and the month since the Luna meltdown. We were doing considerable research and just following the news and watching the charts. And so the DPEG concern completely acknowledged, and anything that we support in the protocol for loans or otherwise are only going to be stable coins that we have the utmost trust in. We will not be chasing, things that come with a high risk or an outsized risk. Yeah, I just wanted to reiterate. I mean, countless hours have gone into looking into this.
Yeah, absolutely. And we came out the other side of this, we went in with a little bit of suspicion, right? I mean, it's only natural that we're humans too. And really the sentiment out there is so fearful. There's a lot of suspicion out there. So we channeled that energy, right? Our own personal, sentiment, maybe, influenced by the market as it is right now. We channeled that into trying to fully understand where each of these stablecoin protocols stand, right? Specifically with regard to MIM and with Frex. And we're seeing that they're both quite healthy, right? We were quite worried before. And, that's not to say that there won't be other events in the future that give us reason to be concerned. But if that does happen in the future, we'll do the same thing, right? We'll just pause. We can pause deposits and make sure that we can assess risk before we continue to accept more deposits into an asset that we think is at risk. of extreme volatility / DPEG. And that is kind of the way we look at things. And so unfortunately, the downside to our risk assessment approach is going to be that we move slower, right? We do move slower, and we think that's not a bad thing. But it's tough in a space, in the DeFi space, because folks are used to things moving so quickly, right? Delivering, new products, and whether maybe it's even marketing campaigns, right? Promotions out there. What we want to do is make sure that we are considerate in every move we make, that we have assessed all risk from every possible angle. And our approach is to make sure that, whatever hypothesis we bring to the table in terms of the market, that we actively try to poke holes in it and challenge ourselves. And if we can't debunk ourselves, then we take that to some outside parties, look at outside parties in terms of other protocols and other analysts, and we see what their perspectives are, right? And can those other parties poke holes in our hypothesis, or the events that happen with other protocols? Do they represent a contradiction to our hypothesis? And if we can't find any reason to poke holes in it, then we do end up feeling more secure. We do think that it becomes, I hate to use the word safer, but it does help mitigate risk, right? And so that is always going to be our position. And because of that, sure, maybe we move slower. Sure, maybe we delayed launch, and that's not what everybody wants to see. But at the end of the day, the safety of user funds is paramount, right? None of this makes any difference if user funds are put at risk. On top of that, we want to make sure that the protocol is safe, that we, NumisMe as a protocol, are safe, so that we can continue to deliver that yield reliably, sustainably, and in any market condition.
So we got a question from Hot Salsa, who, by the way, is the only person, I don't know, maybe one of two people that has found the secret messages, the secret bounties that I've been hiding in our social media posts. So before I get to his question, I do want to reiterate some community things. We do have every week, we have one secret message hidden in our social media posts. It could be on Twitter, it could be on Discord. You find that secret message, you message me, and you get some new. Additionally, we are still running the graphic design contest that is for clothing, apparel. It could be hats, shirts, really anything. We're looking for some good designs. The form and the rules and all of that information is available. I've posted about it a few times. We'll continue to do so, but that's open for a couple more weeks. If you have any questions, really would love to get some more participation in that. That's always fun. Game nights. Our poker nights have been pretty popular. We're always down for new games. If there's any gamers that are listening to this, please reach out. If, hey, I want to, host a Rocket League night, or I want to host a League of Legends or Dota or whatever it is, reach out and we can schedule it. We do poker for now every week because there's a lot of interest in it. And I think we had, 6 players this past week, and Misom just decimated us.
Multiple times, actually. Multiple all-ins. It's I think Misom is on his laptop, so he can't actually speak on the spaces. It's a mobile-only thing, but I'm sure he would be chiming in at this point about his massive winnings. So congrats, Misom.
Yeah. I'm not going to virtually recover from that for the rest of my life. The plan, though, and this kind of feeds into the question that Hot Salsa put up, which is, hey, how are you going to get more people interested in the project? Which is a great question. In the middle of a bear market, the biggest challenge is that struggle for people's attention. A lot of investors either can't continue to invest because they're just not in a good financial situation. They've had bad luck during the bull market, or, there's just the excitement's not there. In any case, the trading volume, the number of investors, that always drops. And so we actually have a pretty robust roadmap from a community perspective, and also additionally in the marketing side that we will begin to execute over time. Community we're already doing, right? So from a community front, some of the things that we're doing, obviously the contests, the bounties, the giveaways, those kind of activities, bring attention to the project, but we still need to retain people. And then that's where the community is the most important piece, right? Building up a community of trust, building up a community around honesty, transparency, and the positivity, that we want to empower the individual investors, even if someone decides they don't want to invest in NumisMe, but they still gain something from the educational content that we put out, the weekly market updates that we put out, or if they just enjoy coming to play poker, you know what, then that's good enough for me. At least you've given them somewhere to pass the time during the bear market, right? But the hope is that they enjoy it enough that they see the vision, that they come to believe in that vision the same as us, and that idea of financial sovereignty. And so really it's just getting them into the door, and then hopefully once they're here, they see all the goodness in it and they want to stick around. And I think that's really, that's how I intend to get people in. If you really wanted to go into the nitty gritty, we do look at things like our social media reach, our number of impressions, and how many people are commenting, retweeting, responding on Facebook, YouTube, those kind of things. We do look at the hard numbers, and that's a lot less exciting. But if I can pull it up quick, Mister, do you remember what? I forget the numbers. I think the number of followers we have over the past 30 days is up something like 100%. The number of impressions we have was up like 300%. For a bear market, we're already exceeding what you traditionally see as an average for those types of metrics. So I'm pretty happy with the progress we're making. But of course, we're in it for the long run. And so it's just, it's always going to be a lot of work there to keep a community exciting and fun. And, if you guys have any ideas on how to make things better or make things more engaging, reach out to me. Always looking for some, new ideas, fresh ideas.
Well said, sir. And I think, just to kind of cover off on Hot Salsa's question there, as far as how are we going to get additional, awareness. Everything Pat just said, and from a more traditional marketing standpoint, we are looking at using all crypto channels, but also going to be using traditional, quote unquote traditional channels, more traditional publications, press releases, on top of all the standard blocking and tackling that you see in the crypto space, right? You have your AMAs, you have your partnerships with different communities. We're real keen and really excited to start testing some banner ads and push notification ads, things like that, right? So, and I actually, one extra thing to add as far as the partner communities, what we're looking to do is actually go out and engage with GameFi and NFT protocols out there, and really, that's a little bit of alpha right now, and won't get too deep into who we're targeting. But we are looking to partner up with some of these projects and incentivize their users to come in and leverage, whatever idle capital they have in our vaults and generate yield against all that capital in return for a little bit of, maybe it's a little bit of, they bring us the capital, scratch our back. We give them a little something to scratch their back, right? But it's all about making sure that we are omni-channel, right? That we are on all channels from a marketing perspective so that we can reach as many eyeballs as possible. And to that point of reaching eyeballs, we really do need the community to help us, right? We love hearing from the community. We love the engagement, and really what we would love to see in the very near future is to see that engagement extended beyond our Discord, extended beyond our Telegram and our own Twitter. We want the community to really help us spread the word, because it's that law of the couple degrees of separation. You have exponential growth and reach, right? An exponential increase in the reach that, let's say, our own Twitter followers represents the baseline reach. Now, when we tweet out something, if everybody that follows us would send that out to their followers and be a little bit of that person shouting from the mountaintops, sharing those links and sharing those messages, you can reach out to that next degree and that degree after that and reach all those audiences, leverage the power of those degrees of separation on those networks and really get that word out there. So, everything we do right now is pre-launch, and we're looking to foster a really, really fun and engaged community. And we're hoping that engagement will translate into, right, some help on the marketing side. But yeah, hopefully I didn't give away too much alpha there, Mr. Pappy, as far as our partner project initiative there.
No, actually, I'm glad you brought that up. I thought about it earlier, forgot about it, but yeah, we are working some pretty spicy proposals for the gaming side of crypto for GameFi. So as I guess that's more to follow on that one.
And Crypto Birdie, I brought him on stage. I think he had requested for a question there, Mr. Pappy. I think, is that right? Crypto Birdie, do you have a question?
I really appreciate everything you guys are doing. I've been following you guys since the launch. Anyways, I'm just really excited about this project, and I really see the utility and it being like, a Swiss Army knife. It has so many different aspects for, users and all that. But with that being said, thank you again for having me. I was just wondering, with the self-repaying loans, what is the minimum duration and the maximum duration?
As far as the duration, I think what you're referring to is the repayment horizon, basically how long it takes us to repay that loan. So that really only is a factor of what your LTV is, your loan to value, right? So we have a maximum LTV of 60%, which is over-indexed compared to some of our competitors out there. We do offer higher LTV, higher loan to value, which means you can take out a larger loan against your collateral than our competitors. But your repayment horizon is a factor of your LTV. You don't have to take 60% LTV, right? You don't have to take out all $60 as a loan against every $100 you deposit. You can take out $30, right? And what that does is it decreases your payment or repayment horizon, and it makes it so that you can get your initial capital back quicker, right? But as far as for a dollar value, let's say the difference between $100 and $100,000, right? If you're accessing 60% LTV, which is what, $60 to $60,000, right? That repayment horizon will be the same between the $60 loan and the $60,000 loan, right? Because it's based on, the horizon's based on LTV. Now, if you take out that lower LTV on $100,000, you'll get it back quicker than if you did a 60% LTV on your $100 deposit. But yeah, LTV determines your repayment horizon, but there is no impact on your loan, your deposit size on your repayment horizon, if that makes sense. Thanks. That was a good question. Thank you.
Yeah, I'm just looking to see if we have any others. Hot salsa during this call. Found another hidden message. Good job, sir. That's almost $4 worth of Noom that you just earned.
Yeah, congratulations to Hot Salsa.
Hey, I have fun hiding these messages, but maybe I'm making them too hard. I don't know.
Maybe we should make them easier, Mr. Pappy.
Hey, you guys got to work for that. I don't really see any. I don't see any new questions, so I think that's it, sir. I think passing it to you. I think I don't have anything to add from the community side.
Thanks to everybody that joined live. It's great to get these questions, great to get the engagement. And please, if you do have any questions as you're listening to this on the recording, hit us up on Twitter, hit us up on our Discord. It is discord.gg/NumisMe, as well as on our Telegram. It's not as easy of a link there to just say on voice. But yeah, hit us up on our channels. Let us know what questions you have. We're more than happy to answer them. But it's been long enough. I think we should wrap it up. So happy Friday to everybody. Have a great weekend. And thank you for joining again. We'll see you all next time.